Hey, Felix, excited to have you here. 50 episodes in, and it's been a great ride.
Yes, I'm excited.
I want to show you what I put together here. We got some great clips, great ideas that you've given out,
Sure.
and they've been really good. And also, I want to show you something before we get into that. Is I'm very grateful for you allowing me to interview you, build something here, extend my knowledge. But I want to show you also that people that are watching this show every day, they're really grateful as well. And I want to read some comments to you to show you our gratitude, appreciation.
Only good comments.
Only good
No
comments.
bad comments.
I know you don't really go over these, so that's why I wanted to make a list and just show them to you now.
Okay.
For you to see. First one, this channel is a gem, loving the content. Very useful info, great tools. Put a thumbs up on the video. And definitely, guys, if you haven't put a thumbs up on the video, make sure you like the video. It really helps us out with the YouTube algorithm. Thanks, Felix and Marco. I've learned more here than anywhere else for sure. For years, I made money only to lose it and more. Tried everything. Finally, I took your course, and what a game changer. This podcast is an extension of your course. Thanks for your expert analysis. And I would tend to agree 100% with this comment. Options Geek, your insight is invaluable. The specific plays are great, but the process and knowing how to play the game is the real value. Now that I evaluate risk, reward, and probability, I'm getting into better situations. Understanding how to get in and out and the proper size has made a huge difference for my peace of mind and the profits. Now I worry about my winners winning. Actually, it isn't worry, it's more excitement. You're the man. People with some financial knowledge and trading experience will quickly realize what a great show this one is. I'm watching every episode once it came out. Super pro analysis. These are really great. You guys deserve more views. Always such a good insight. Thanks. Here's a funny one. Oh my god, dude, you're a god. Tech names really crashed. You were right about Facebook and now this. Oh my god, unbelievable. P.S. You sent me like almost $2-3K because I sold everything on Monday. My folio was 100% tech. I would have been obliterated. Lol. I'm so grateful to this. All right, this was a great one. Now let's get back to the video.
That's awesome. That's what Options Geek, what the podcast is about, and what Options Geek's about is trying to build a stronger, smarter, and respectful community.
Exactly, and it's a safe zone for everybody to express their opinion as long as they're respectful,
right?
And for everybody to learn, definitely. Yeah.
Good.
So
what do you got?
First one I got is ARK. Yeah, let's take a look at ARK.
Okay. ARK is interesting. I mean, we talk about it on the podcast all the time. She caught it. She caught the momentum train, but she is potentially stuck, if you will, here. She's got to keep going with those momentum. What happens is you get so big so fast, and it's not just about her being right. It's about her being right and the money following her. So as the ETF gets bigger and bigger, she has to be more and more right, and it becomes very difficult to do that. And that's when you can run into trouble. So.
Mm-hmm. Let's play it.
When I look at the June, these 120s, they're 450, and you're like, man, stock's going to go down 35. That's a 20% move down. 20% move down in ARKK in 3 months. Well, this thing could move down 6% in one day. Comes in, she's buying smaller momentum names in an environment where momentum was working. We talked about the S&P versus the TLT trade, that spread, that rebalance, and how over the next 6 weeks, you might see some trouble in momentum stuff. So that was pretty good. I mean, that first trade when the ARK was trading 155, I believe was a volatility trade, but it was a smart volatility trade. It sort of showed the risk. People were able to buy cheap options, cheap put options. And when they're doing that, even on a volatility basis, you can be thinking that the market's going down, because the market going down, volatility explodes, and that put explodes in value. And so when I saw that, I thought, what a great play. And I see that the big guys are starting to come in and start playing that downside. And that was really the tip off. It looked like a volatility trade. And then over the course of the next 2-3 weeks, we started seeing more and more of these bigger put buys down below. And, since then we've been talking somewhat negative, to be honest, on ARK, on some of these momentum names. And we've been pinpointing not just ARK, but we're talking about Tesla. We're talking about even DraftKings, which feels like it just doesn't want to stop, but starting to show some weakness. So these are things that, the ETF ARK led to a lot of other thoughts, and the UOA was confirming a lot of that throughout the last month and a half.
Right. And to continue with that train of thought, let's look at a clip from Lee, NEO, and XPV. that you were actually talking about?
Is the last buyers are up here. There is buying. There's volume going on. I'm talking about 100 million a day. There's people trapped up here. There's people still here holding that it doesn't break this. So, what likely happens is likely you see a 37.5 break. Like what we're doing is framing. It's important to understand what we're doing there. We're framing the situation and trying to understand the up and the down. No, I surely don't know where ARK is going to trade, Neo is going to trade, Lee or XPEV. No one knows in the short term, right? That's the answer. No one knows. Okay, but what we do know is we know good risk reward, and so what you're seeing with those lines in there is trying to figure out those levels where there could be some very large movement or a change in the supply and demand of the stock. And when those changes happen, it can cause a burst of volatility, and that's where people can take a look at the options that they want to buy and how they want to buy it. So that's how you sort of combine the technicals with the options and then the backdrop of the story, which, by the way, we've been doing a lot lately on the backdrop and understanding. You mentioned the SPY versus the TLT. I think we talked about in a video there, the SPY and the TLT, the SPY versus bonds rebalance. That's been in the backdrop of our conversation over the last 6 weeks. So all of these things, they have, it's not just Neo or it's not just ARK. It's, Neo within the framework of, this big macro trade that may be happening or this rebalance trade that may be happening. And I think that's important. I think it's important for people to understand that. So that Neo was perfect. It did break 37.5. Probably, I think went a little bit lower, but it's I don't know if it goes to zero. I think it has long-term value, but now the risk reward has shifted. And so we're reevaluating as things move. All of these trades, unusual options activity within the confines of a chart and the framework that we're building, they tell a story. And that's what we're really doing on the podcast. We're trying to, what is that story? What is, where is the good risk reward trades and how do we find them?
Can't ignore the leading horse, Tesla, right?
That is the lead horse. Yes.
Right. So let's take a look at Tesla.
Said the question is, where does it go? And I would say, you have something that's, had a big move. This was S&P 500, shot all the way up. Okay, so it shoots all the way up, has this, and now it's doing this. Breaks here, and yeah, there's a little bit of consolidation here for 3 weeks. So, you could see a little bit of stoppage here, but frankly, it might just go to where the supply, where the demand came from and where they bought it. And even though they got rid of some, and that was the index. So maybe not all the way back to 400, but I could see, somewhere in this range right here. Not bad. Not bad.
Right around where it landed. Yeah.
Right there. We were calling 500. I think the title of the video was Tesla go to 500. Got to like 535. I think it can go to 500 still. I still think that it's under some stress. And I talked about Kathy Wood. She came out with a $3,000 target, and it really didn't move the stock. Stock traded on the low of the day after she came out with that. It says something. It says, what she's saying and this fantasy story she's pushing for Tesla may not be what people are absorbing anymore. They're hearing it, but they're sort of like saying, I'm going to get out of the stock. That level where the S&P announcement came was right around 400. It's a very important level. So again, supply demand switched right there. It was explosive, but on the way down, it does take several months for it to work its way back to where fundamentally it was at that moment.
Fair enough. And now, talking about ups and downs, the stock market has been very, very shaky in the last couple of weeks, and you've been talking about it.
I'm saying and making sure that it's very clear for everybody to see there's nothing in March and after March 19th. And after that, you got this wide range of dates all the way through April 16th, which is 2 weeks, which we think April 1st is important. We think this final month date there's something to be had there. And it might be really, yeah. So that was a good one. That was timely. The market, what we're doing there in that particular trade was I'm looking at how to hedge the portfolio, right? How to if everybody's buying calls, the UOA is all call buying. Where can we buy some puts? If there is no UOA really in puts, doesn't mean that we're not going to hedge. At Options Geek, we are managing risk, and we're managing risk by having some puts on, whether it's single stocks or whether it's indices. And a lot of times in the last 8 months, it's been SPYs because there hasn't been many names where there's a lot of put buying. So we're concentrating on SPYs, and I'm there in that video. I think I laid out pretty nicely, trying to show how I think about timing, how I think about strike, how I think about pockets of weakness. And I built a tool, the open interest tool, to help people navigate those questions and figure out and visualize and say, okay, there's pockets of weakness right here, right? This is what we're worried about, pockets of weakness. When no one is long puts, the market could actually go down. What happens is the market starts going down, and then everybody catches up on puts, and that's when you can expect it to go back up, right? And then it goes back up, those puts expired, and then it does it again. That's what makes it going down in stocks, individual stocks, and in the overall market. Oftentimes does that. It makes it. I always say it makes it impossible to catch it, right? It makes it impossible because it's sharp drops, sharp rebounds, then sharp drops again, then sharp rebounds, then another sharp rebound, and then a sharp drop. It makes it very, very difficult to maintain that position the whole way down.
Exactly. Great. I love it. The next one I have for you is Penn Gaming.
Penn Gaming. Good one. Okay, so we have the 140s here, 8,000, 9 3/4, 1007, 1006, 1007. To be honest, looks to me like it might have been sold just from what I see here. Okay. Somebody's willing to sell the 140 calls and take in $8 after running the stock from 80 to 120. But yeah, I think that was a good one. So that's a good one because we, at UOA, at the Winning Picks podcast, we're not just looking at UOA to just get into every position. We're looking at UOA for signals, and for signals for the market, the options market, to tell us where the big money flows are coming in, when they're coming in, what they're thinking, the timing they're thinking about it. And Penn Gaming, when it made that first big move up, there was this call seller. You started seeing sporadic put buying, hedging, collars. When you start seeing that type of options, institutional option strategy being put into the market, you can get a sense that after a big run, that this might have a period of a couple of months of weakness. And so I think we caught that one pretty well. If you ran that up all the way from a long way and you're holding Penn and you're thinking, okay, it's going to go to 160, 200. It might, but maybe over the next 2 months, you might get a pullback here. So if you're trading the name, maybe right now is not the place to be fully in, and maybe you take some off. So a lot of times we're using the UOA to help us manage what we're doing and what we're seeing and what's in our portfolios. Whenever we see UOA and it's selling, it makes me think about, they're selling calls. Doesn't mean they don't like it. It just means that they don't think that the upside has the same potential acceleration than it did 30 points ago. And they're willing to take some premium now and take some off the table. So I think that's what that Penn Gaming alluded us to, the conclusion that this stock was toppy here and we might get a sell-off.
Great. Now let's take a look at CCJ, another great win that we had.
CCJ. Yeah, CCJ was a name that was hiding in the weeds, if you will. At Winning Picks Premium, we saw some big call buying. Someone was setting up for a big move, and we jumped on that. And so that turned out to be about a 500-600% winner as far as the option that we bought. But they have continuously come into the name over the last couple of months, buying upside calls, buying up calls. Even recently, now the last week, you could see on the podcast we're talking about big call buying into April. So CCJ is interesting. Yeah, let's see what I said. I don't remember, when was this? Open. They're buying these to open, maybe even these, but they're buying these, they're selling these, and then they're selling these to close. It looks like. You see that? So they're adjusting their risk reward now. What happened is exactly what the reason why I bought the Junes. They're running out of time, and so they know that, okay, can Cameco get to 20? Maybe. Nobody knows whether it can or can't. Maybe, but or will. I think it got to 20. I think it got right to
Yep.
19 and change.
Hmm.
That one's a great video, I think, just to see how even the big guys don't get it right every time. But when they see that there's a better opportunity, they have no problem changing their risk reward and adjusting what they think is going to happen. And when they do that, it shows you even more precisely what they're thinking,
Yeah, that was a
which is
brilliant
good.
trade. Brilliant trade. The members definitely profited good on that one.
Okay.
And now let's take a look at Alcoa.
Someone is actually saying, you know what, I'm gonna buy these Aprils for $1.25, the April 25s, 12,000 times, and the stock was just 26. So it could get there, and at least I'll be long a little bit. But in fact, I'm probably going to get rid of some more stock up here, and I have about 1 million shares possibly that I could. Yeah. So, a lot of the times one of the big questions we're asking ourselves in the UA is, how do you know? Or people ask me, how do you know someone is doing this for this reason? The reality is, unless you're sitting right next to them, you don't know. But by combining my experiences, nuances, and figuring things out, we're looking for good risk reward. That's what we're looking for, good risk reward. And in this case, the chart didn't look great, but the option looked pretty interesting because the type of size he's buying, and because commodities were all ripping, it had just pulled back really for the first time. And
Right.
so that first pullback, usually in a really bullish cycle, they're going to come in and buy it. So that's what they did. And the rest of the commodities too actually came in and they were bought. So that turned out to be pretty good. That turned out to be a great option. Whichever
Mhm.
way, if he just bought it outright, tremendous. And if he bought it outright and sold some stock, also tremendous.
Yes, great one, definitely. These were awesome. I really enjoyed it. And now, why don't you go and show us some other winning ideas, real
Absolutely.
quick?
I put together myself a few names that I thought were interesting. And yeah, let's take a look. First one I wanted to look at was a name that we've been pushing for a while that I think is still has legs, still has a lot going on, and there's a lot of dollars gravitating to it. We're seeing a lot of
Hmm.
call options activity, and that's in GM. You can see the GM chart is very healthy. The stock is moving up since August from 25, traded as high as 62. In early January, we got long calls right before that spike, and then we got more calls in March. We're looking for $70 in the stock. It's going to need an announcement from the CEO Barra, hopefully unlocking some value with all the other businesses that they have internally, something like spin-off of a cruise. That would be a big plus for this stock going forward. In a nutshell, that's GM. And I think the video does a good job of outlining what we're thinking there and,
Right.
and how we want to approach it. The next name I want to think about is ATVI. Not a super watched video, I can tell you that
Right.
much. But inside that video, we go through some of what we're looking at and what we're thinking, the plays we're seeing, where people are buying options. I think there's real value there. And then the last two stocks is
Hmm.
some of these social media advertising stocks, Google and Facebook. We had a couple of videos out on them. The chart set up nicely. The options flows were there. I think that it's worth a look to see how we're framing it, what we're thinking. So those are some of the longs. And now to give you some of the shorts that you might want to look at, I'd say the first one is, maybe it's 1 and 2. They're the same, ARC and Tesla. Since that moment, right around 155, we've been, really harping on the risk of the ETF, the liquidity risk, that if we have this move down in the market, what does that mean for the ETF? Can she get out of these names in an orderly manner? She's in a lot of illiquid names. And I still think today you have the same risk, and you have, let's take a look at Tesla. The charts almost mimic each other. And I think there's still real risk in Tesla down to the 500, even 400 range, targeting that S&P ad date in mid-November. I mean, that's where we started here. So why couldn't it get back there? If it does get back there, then what does that mean for ARC? So these two are going to go hand in hand over the next several months. Then I'm looking at DraftKings. DraftKings is a name that people love, and I get the story. Online gambling, it just keeps going higher, and these estimates of how big the market is keeps going higher. It's led by Kathy Wood, and her analyst came out saying they think the total addressable market is $180 billion. Whether that's correct or not, I mean, we're talking about something that started into 20 billion, 30 billion, 40 billion. They come out with $180 billion. These are big numbers, fantasy numbers. Will they get there? And if they get there, what does that mean for the individual companies? DraftKings is already worth $25 billion. How much of that total addressable market is priced into the name already, priced into the stock? That's something that, everyone should be focusing on. Forget about the opportunity. We get the opportunity, but what does it mean for the stock? That's the issue. So those are names that I think are worthwhile to look at. The videos are outline our thoughts, the options flow, the framing of the risk reward that we do. And but over the last, call it 3 weeks, we've introduced a couple of new strategies that give us clues, right? They're strategies that people use when a stock goes down, strategies that people use when a stock goes up. And it does give us clues as to where the big money is what they're thinking and where they're positioning themselves. So that's all I got. So I'm super excited. We got to 50 episodes. We're a little bit further now, but I'm excited to start building this community, get people smarter and more engaged in the ideas and the process, understanding that we need a plan and showing people how to play the game. I think to get the most out of the podcast, I still believe that if you get the education, buying 3 Steps to Profits will leverage your knowledge here. It will leverage what you've learned there with this podcast. The podcast by itself is valuable, but with that foundation, your knowledge will increase tenfold. So that's the best I can do. And we'll be back 1 to 2 o'clock every day from Monday to Thursday. And I encourage everyone to jump on board.
Yeah, definitely. Thank you, Felix. This was great. It's a great run. First 50 episodes. Awesome. And anybody watching, make sure you like the video, subscribe to the channel if you haven't. And to check out 3 Steps to Profit, you can go down below in the description.
Awesome. Be good.
Thank you.